Hey friends, my dividend stock strategy is completely evolving right now in 2023. I'm about to embark on a new chapter of my dividend stock investing journey, and I want to explain to all of you in the video today why my strategy is changing and how my strategy is changing. But the best way that I can illustrate how my strategy is changing is first by going back in history. So how many of you remember 2008? The best way I can explain 2008 is by sharing a picture with all of you of myself. There I am on the airplane with my BlackBerry, not a care in the world, with my wife on the way to the Bellagio in Las Vegas. And it's so much fun. Once we get there, we have the fountain view room, as you can see on the screen in front of you right now. This is really when I started earning meaningful job income. I had enough disposable income to really start investing in a larger way, and I was all about the sin stocks. I was a thug life dividend stock investor, and in 2008, I started purchasing Reynolds American, and in 2009, Altria. Reynolds American, by the way, was acquired by BTI, which I still own to this day. I want to summarize really around that time period what I was thinking in my mind, what informed my investing strategy. As you can see on the screen in front of you right now, basically 2008 to 2011, Ian. I call this the thug life investor, Ian. This is honestly the Ian back in the day. I was probably driving to work listening to Mrs. Officer by Lil Wayne. How many of you remember that track? Put a thumbs up on this video if you do, and please share in the comments below. Boy, that was on heavy rotation when I lived back then in the Bay Area commuting to work. I was young, I was rebellious, I was very confident, and I can just illustrate that confidence once again for all of you. Check out the picture on the screen again. Check out that gold chain I am rocking right there at the Bellagio with the fountain view room. Very, very confident in those days. It was so much fun. But as you can see on the screen, I really wanted dividend stocks that could show me the money right now. That's really why I gravitated towards those value stocks, those sin stocks, those higher yielding stocks. And really, I was not worried about too much at the time. I had all the time in the world, and honestly, all the confidence in the world. And I think that was important to illustrate to all of you as well, that I was a young guy, young investor. And so kind of this concept of risk, it wasn't something that I was thinking about too consciously. Overall, I was a dividend stock investor, of course, so I had a worldview of understanding and minimizing risk, but still I didn't feel a lot of risk venturing into the sin stocks. And as you can see on the screen right there, I don't show Reynolds American here. That was the one from 2008. But in 2009, I did buy Altria at $15.99. So I'm yielding about 23.5% simple yield on cost on that first tranche. But basically, I was buying stocks like Altria. And I'm just showing the current snapshot of Altria here. As of today, it's trading at 47.40. It's a little bit off the 52-week high, and I actually like Altria here. Quite frankly, I bought some more Altria today, but my patrons already know that. It has a forward PE right now of 9.39 this year, 8.96 next year. It has a juicy starting 7.9% dividend yield, payout ratio of a 74.5%, which is below their stated goal of 80%. So there's room to increase that dividend, and they've been increasing the dividend on average by 7.33% per year. And anyway, the reason I'm showing you that is that was really typical. That was really classical of the types of stocks that Ian, the thug life investor, was buying between 2008 and 2011. But something changed in 2011. 2011, I started realizing, Ian, your dividend stock strategy has to change. You have this base that is completely built out of thug life sin stocks. But Ian, you have to realize that the world is changing a bit, and now that you're a married man and you're kind of building your life here, it's important to venture out and diversify into higher quality blue chip dividend stocks. And so I was really focused outward at that point. I was focused on the future. You can see in the photo in front of you right now, there my wife and I are at a corporate holiday event back in 2011. And this was really the era where I'm like, hey, Ian, I'm establishing my business career in an even bigger way. I'm going all out in the business world. And I'm also really trying to build out this portfolio and make it destruction proof. And so in doing that, I want to summarize my strategy that has really guided me from 2011 through 2023, quite frankly, through this present day, because it's going to help illustrate where I'm going next. But as you can see in front of you, this is just a brief synopsis here that in 2011 through 2022/2023, I was really the Thug Life dividend growth investor. And so I'm still Thug Life because I've always been Thug Life. I was probably listening, by the way, back in 2011 to Otis by Kanye West and Jay-Z. That was a fun track from back then. I remember back in that day, I was still listening and watching MTV when they had the music videos back then. That was a pretty good music video for that one as well. But I realized in 2011, I'm getting older. I'm a little more cautious. Also, I guess I was a little more humble. I wish I had the confidence of the Ian back with that BlackBerry and back with that gold chain at the Bellagio. Those were the days. I'm a little more humble during this generation of Ian, and I'm willing to wait for the money. I started realizing, hey, I've got time for the compounding to work. I'm going to wait for it. And I also realized I'm not only investing for myself, I'm investing for my family, for my wife, for my kids too. And so they can enjoy the yield on cost as well. I was very, very kind of future focused, future oriented. And with all of that, I want to give a sample stock that I bought in 2011. And the perfect sample stock is PepsiCo because they just came through with a massive 10% dividend increase. Oh yeah. And by the way, I did a short here on YouTube. I hope you saw it. Check out the shorts tab on my YouTube profile. You'll see a fun short about the PepsiCo increase. I'll link to that in the pinned comment below as well. But as you can see on the screen right now, I bought PepsiCo back in 2011. I paid on my first tranche $63.78. With the recent dividend increase, my simple yield on cost for that first tranche, not even counting reinvested dividends, is now a solid 7.9%, which is basically, by the way, in line with Altria's starting yield. And so that's a fun comparison that it's taken me over a decade to get to Altria's starting yield on a simple yield on cost basis. Anyway, I also show on the screen there some metrics. I want to share where it's trading now. It's just slightly off the 52-week high. Forward PE is expensive. It's not out of this world. At least it's not up at 26, 27 anymore. It's now at 24s, 22s for 2024. And I love the starting yield, though, of a 2.9%. It's really high, actually, because they just did that massive 10% increase. And I like their dividend growth rate on average of 6.4%, although it could be a little bit higher. Thankfully, the CEO in the recent earnings announcement is indicating, it seems, that the dividend growth rate going forward is going to be really strong. And so basically that was me. Now you all know me right now. This is Thug Life version 3. I want to share how my strategy is changing right now in 2023 and also kind of moving into 2024. So as I wrap up 2023, I am going to be really focused on my core 4 dividend stocks, which is kind of the end of an era. Once my core 4 dividend stocks, which is Starbucks, J&J, Pepsi, McDonald's, are all kind of on parity more or less in terms of position size, that marks the end of the era. And actually that era is ending pretty soon. I made some big moves in my portfolio today, but my patrons already know that. Link below in the pinned comment to my Patreon that basically kind of gets me to my 2023 goal. And so as I look at kind of the latter part of 23 and into 24 and beyond, here is what I am all about looking forward. Basically, it's Thug Life skeptical and ready to retire investor. And so what am I listening to, by the way? You may be wondering. I always listen to the old school hip hop, but these days I actually travel to the Bay Area sometimes for work. And whenever the radio comes on, I'm like listening to KMEL, for example, and Vince Staples Peoples comes on with his song Magic, I'm all about that. I am telling you, I am all about that. And so that is what I'm listening to right now. But look at it. I'm getting old. You just look at my YouTube videos from a few years ago. I look younger. I'm getting old. I'm married with kids. I'm a little bit skeptical and rebellious and kind of fed up with the system. I'm going to get to more of that in a minute. These days, I'm kind of humble because life can humble you, but also don't mess with me. I'm kind of at that age as well. I'm kind of absolutely unwilling to wait at this point. I'm thug life again. Picture me rolling like Tupac. Basically, I'm focused on present cash flow right now. And I'm ready to travel the world right now. And traveling the world right now is really expensive because not only am I married, but I have 2 kids. So I'm paying for the 4 of us to travel the world. And so that is expensive. And so what are the types of stocks that I'm buying these days? Obviously, I like stocks like Altria, but also stocks like Universal, as you can see on the screen right now. I recently reviewed this stock in a video. I'll link to that in the pinned comment below. So I don't want to go into too much detail today, but they're basically trading at their book value, and they pay a steady 5.9% dividend yield, and the dividend grows over time, although it probably won't grow over time as much as the numbers indicate because they had a one-time bump a few years ago, which was pretty darn substantial. And so that's where I am right now in terms of my personal life. And to take the strategy a little bit further, as you can see on the screen right now, I just want to share more or less, I am leaving everything that exists as is. There are rare cases where I will alter the existing portfolio or sell a stock. I actually, unfortunately, had to sell a stock today. I shared that over on Patreon. But more or less, everything that's deployed, I'll let it lie. It is what it is. But with net new capital being deployed, I'm going after high yield right now, mostly qualified dividends. And I want some underlying equity and dividend growth, but more important to me is the starting high yield because I want to use it right now to pay my bills. This fits the Ian of today, but it also fits the macroeconomic environment in which we live. And so this is the next segment of the video. If you do enjoy the video so far, please go ahead and smash that like button. It does mean the world to me. I'm up late here, working hard for all of you out there in the community. I love you all. Now, some of you may remember I recently interviewed my friend Greg here on the channel. He's living off of dividends. And a lot of what he said really turned my world around and got me thinking. So thank you, Greg. He's the Dividend Monster over on Instagram. I'll also link to my interviews in the pinned comment below. But he got me thinking about current yield, but he also kind of triggered some deep thought in myself about just where we're in the world right now. Because the Ian that has been 3 kind of related but somewhat separate eras of investors starting in 2008, as I have evolved, some of that has probably been informed just internally, but some of it is from our world. And the Ian right now in 2023, where I'm going with my investing, where I'm going towards current yield, it's also informed just by our macroeconomic environment. So as you can see on the screen right now, it's obviously I'm ready to retire. I'm ready to travel the world and enjoy the dividend income. But also, I want to just share a few things. So first, from 2000 to 2012, mind you, the S&P 500 went nowhere. That's interesting. And so, seriously, actually, I'm going to take a step back. I want to put it on the screen. Look at the chart in front of you right now. That is the chart, and you can see there, literally, it went up and down, but at the end of the day, it was a sideways period of time. Okay, that's really interesting. You might start thinking, well, boy, it kind of makes sense now, Ian, why you were buying Reynolds American back in 2008, Altria in 2009, because the S&P wasn't really going anywhere. You were buying yield. Now, I actually believe that we're entering a period that's going to be somewhat similar, where the S&P goes nowhere. And so you think, Ian, why are you buying high yield? Well, because I think if the S&P is going nowhere, it's going to be indicative of our economy. And if the economy and the S&P are going nowhere, I think dividend growth is going to slow. And if dividend growth slows, I just want all the yield I can get now without as much kind of emphasis or weight put on future growth. Surely I got the dividend growth with PepsiCo, for example, over the last decade or so, but will that replicate in the next decade at the same pace? I don't know. But as you can see on the screen right now, basically, I think we could be entering another similar period. And there's a lot to worry about right now. We have $31.5 trillion in national debt in the U.S. Seemingly, the natural environment is just worsening. We're facing droughts, water-related issues, storms and flood-related issues, earthquake-related issues. Boy, my heart goes out to anyone affected in that recent earthquake in Turkey. We have war and global tensions, Russia, Ukraine. We have a China kind of weather balloon coming in the U.S. causing all this drama. We have this overlaying belief right now in this rhetoric on social media that corporations, the very corporations that I invest in, are greedy. That ain't good. We have high inflation. We have high interest rates. The high interest rates make economic expansion for the very companies that I own quite difficult. And quite frankly, it gives a higher risk-free rate, which makes investing in equities more difficult. We're starting to see layoffs at larger companies, although so far small businesses have been holding up the overall labor market. We'll see how long that continues. We're becoming really technology dependent, and I think it can create some risks such as cyber attacks, power grid stuff, cyber stuff. It's scary. And overall, to boot, stocks are very expensive right now. And so, quite frankly, I'm at the point with my dividend stock portfolio where I'm skewing towards higher yielders. Now, am I going to compromise quality for yield? No. But if I have a belief that our economy will start flatlining for a prolonged period of time, where the debt that has been built up is going to be difficult to recover from, to get out from under. If I have a belief that corporations are going to have a hard time growing earnings, not only because interest rates are high, but also just because they're being attacked from every angle, I'm not so confident that I'm going to see another decade here of really high dividend growth, really high earnings growth. And so it informs me that I need to go, just like snow again, I need to go out and purchase equities that offer current high dividend yield. And I talk about equities, actually, that's a key word. I have some bonds too, but I skew towards equities because of the tax advantages here in the US with the qualified dividends, long-term capital gains. So that's where I'm at. Let me know in the comments below what you think. Do you have a completely different take on things? Obviously, I'm at a certain cycle in my life. I'm in my 40s where this all makes sense to me. But maybe you're younger, none of it makes sense. You're doing something completely different. Maybe you're older than me. You're a lot wiser than me. You have a completely different take. Let me know in the comments section below. I can't wait to hear. And if you enjoyed the video, please do give a thumbs up. That means the world to me. Before we go today, in terms of full disclosure, I own the stocks mentioned today. I am long Altria, ticker MO, BTI, ticker BTI. I am long Universal, ticker UVV. I am long PepsiCo, ticker PEP. I am long Starbucks, SBUX, McDonald's, MCD, and Johnson & Johnson, J&J. I own those stocks in my personal dividend stock portfolio. Before I go today, in terms of a friendly disclaimer, today's video, it's not investment advice. I'm not a licensed investment advisor. Today's video, it's just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult your licensed financial advisor first. I'm just sharing my journey here on YouTube for fun and entertainment. It's possible to lose money in the stock market. I love you all. I'll see you in the next dividend stock investing video.